BBB, Beginner's Business Bloopers. I'm back. Have yourself a merry little Christmas. Well, we know the holidays are on us as quick as we bat our eyes. But I didn't want to end this year with not talking to you about the most valuable thing in a business. These are 8 types of customer payments and what your business should accept. If you're a first-time small business owner, you might be tempted to say that you'll accept any type of payment as long as you get paid. Some people do bartering, kind of risky. However, that's dangerous precedents to set. Payments come in all forms, some less valuable and some less than trustworthy. And by accepting some types of payments, you might be layering unnecessary risk onto your already risk-filled business. Meaning that if you being a small business, you're starting out, it's already at a risk and already has a red flag. So why add to it? Before you allow customers to pay any which way, you should know the advantages and disadvantages of different types of payments. Cash. Everybody wants cash. Some people accept cash, but not all businesses accept cash. Cash used to be the king of all payments. It used to be the almighty valuable dollar, the little paperless paper that holds no weight. It took out the gold and replaced it with this paper. Now, how about this now? What's going on now? Is it that much value in it? The dollar, especially the US dollar, you can just hang it up. It is definitely not in favor of the youth for today. And some of us older people is on board too, is that it's not valuable as all. So the young consumer's like, no, I'm not dealing with cash. Unless your business only manages extremely high dollar invoices, you should be willing to accept cash. The beauty of cash is that it costs nothing to process. You merely collect cash payments and deposit them in your business bank account. However, you should be diligent to document your cash payments because IRS audits pay close attention to cash transactions, and even few dollars and cents uncounted for calls land you numerous fines. And you got to understand this. We're saying cash, but we know very well 2021 cash is pretty much is going out the door. It's not the new popular dollar thing nowadays. But we're going to talk about that later because it's something that's even more powerful that's knocking cash out the window into the shredder. And we don't even want to talk about the banks. Now, I can touch bases on it. But there's the cryptocurrency. The cryptocurrency is the devil in the old to some, but very new to others. And for its banking, it's a new banking system. So don't worry about the banks. You need to try to pay attention to what the banks are doing. Because rest assured, they're not sitting around thinking about $1 or $5, $10, $20, $1,000 because it's totally different to cryptocurrency. The second most valuable thing to take as a business is check. Checks are far from an ideal form of payment. Primarily, they are risky for both customer and business alike. Printed on checks is all sorts of sensitive information, including account numbers and addresses, meaning a misplaced check could expose a consumer to identity theft. They run very risky when you're talking about paper. Checks. Checks are relatively easy to fake, and a few businesses can recognize the signs of fraud before they are affected. So meaning not all business can recognize. Some business owners may be able to, but banks definitely do understand what is a fraud or a fake check. But time and time often, You'll get a little fake check in the mail. It looks almost real. You go to run to the bank and you think you got this money, and you come to find out it's a fraudulent check. It's a fake check to make you believe that you got some money. And the downer is it takes time to write, but a few businesses are willing to wait as long as they know that your paper got money in the bank. Unless you are a B2B, you can choose not to accept checks, and you'll likely be better for it. The number 3 is the credit card. Any type of plastic payment is expensive for business. A debit costs 21 cents plus 5 cents of transactions, and credit card can cost upwards of 3% of the transactions. Still seeing as though there are more than 500 million credit and debit cards in circulation in the United States. Unwise to operate business that does not accept plastic. As long as you do your research and affordable merchant service, you should be able to accept credit cards without a problem. But always remember, you're going to choose one that's going to benefit your business in your pockets. Because there's a lot of companies that come to your door when you first walk in your business trying to sell you a will and deal that they got plenty of promise to make your bills different, and 10 months later down the line, you get these hit with these fees. Or a certain customer uses a certain type of card, because a lot of times there's different types of merchant accounts, like your Visa, your MasterCard. Those are 2 different type of businesses, even though those are form of payments and their credit cards, but they have their own way of doing business and their own fees. That's just something to give a thought about. And number 4, mobile payments. Though Google, Apple, and other major tech empires expected mobile payments to revolutionize business, and true adoption of mobile payments has been slow. Half Americans have used their phones to make purchases in stores, and as the Gen Z starts claiming more purchasing power, you should expect to see the use of mobile payments skyrocket. But you still want to be cautious about those mobile payments, because sometimes there's always a trickster with those different type of platforms. You still need to verify if they got that money, because they can, as soon as you think you got it, you turn back around, the customer go out the door, there's a scammer, and then it's not there. And be careful for those little cash cards for your business, because the banks are not on your side, and the merchants when you accept gift cards. The number 5 is Bitcoin. Even though I touched bases on it, the interest in Bitcoin and other cryptocurrencies has been growing for years. But after the Bitcoin market crashed earlier this year, almost everyone has been trying to buy a piece of digital currency. It seems that most consumers view Bitcoin as volatile investments rather than practical payment method. So it's unlikely that you need to find a way to accept cryptocurrency at any time soon. Now, I would suggest you may want to think about it in your business as an alternate payment. Yes, it's volatile, but it can go up and go down, but it's like fast. Is it a good investment? It's choosing the right coins, finding out the background of the company that's behind the coin. What are they invested in? What is those Bitcoin or cryptocurrencies? What are their business investment? Plays a big part on if you accept your Bitcoins, because you could choose being a business owner which type. But when you have to do your due diligence on each cryptocurrency that is out there. Number 6, bartering. Though you might consider bartering to be practiced more appropriate for business in the middle age, many startup and small business can benefit by trading goods and services with other business. Now, bartering. What you want to know what bartering? Sometimes someone you can do business with without exchanging cash, because they have a service that they can offer you and you need their service. So you do exchange. For example, if you are a brand new web marketing firm, you might offer photography, a new website in exchange for the shooting of your publicity photos. Fortunately, most consumers are more than happy to pay using more traditional payment methods, so bartering shouldn't be an option in most cases. So usually bartering go hand in hand if someone may find use of it, that's type of trade dealing with their personal. A lot of time, or they can do an even exchange because each business needs something that the other business need as well. Number 7, money orders. Like checks, money orders are paper documents used to make payments. Unlike checks, money orders thoroughly secure, issued only after a customer has offered the money present on the order. Meaning, when they went into that store or that bank, they automatically had the cash. They're not using their checking account or check to write a check to get a money order. The money is already confirmed. They already have the money, and so that money is already secured. Money orders are really a rare form of payment, most often seen amongst low-income customers. A lot of times, a lot of low-income customers do use or prefer that because they don't trust the banking system. And I'm not going to say all low income, because some people just don't. They have skepticism in their mind. They don't trust the banks. They don't trust a lot. And so sometimes people do not do any type of banking. And it doesn't mean that they're low income, but it has always been stereotyped that those are the type of customers that use money orders. But it's your choice to decide to accept them. Number 8, the final. Automatic clearinghouse ACH payments connect bank accounts with billing accounts so payments are made automatically. Most often, this payment method is used for recurring payments for services. For example, employers' direct deposit is an ACH payment made to employees. Freelancers should request ACH payments from their clients because it's faster, more secure, less costly than other forms of payment. No matter which payment form you choose, make sure it is liked by your customers. And it's great when you can do an ACH to your employers, especially if you have part-time employers or same-day work employees where you can just go in and ACH that money to them. So those are our top 8. But the fact is, cryptocurrency is swarming. 2021, 2022, it is the new money. And I would suggest that you look into that for your business. They have it where you could be the banker. Look into your decentralization. Look into it. Do you want to be the one that's in control of your finances for cryptocurrency and any money? Or do you want to still stay the traditional way? That's a thought. Do you want them to still take more than what they should take, or do you want freedom? Freedom is decentralization. So these are topics that are so important going into the 2022 year that you need to keep in mind, that you may want to think about accepting cryptocurrency because it's changing. They already have cryptocurrency ATMs. A lot of companies, a lot of vendors, a lot of stores are already accepting. Sometimes you can even purchase a car at some dealerships with cryptocurrencies rather than going, and it's a quicker method and a faster method. You'll be surprised the ease of it. Yes, it may be volatile, but it's the movement of the new money. It is what's popular. It's not just a young person's money thing. It's going to be a universal thing. Most countries are already operating in this. So this is something that you may want to look into for your business. See if you want to be stuck with the traditional way where they're still taking fees and fines and money out every time you, even and telling you when you can withdraw your money, when you can have it, and when they can release the payments. These are things you want to think about. Or do you want to have full control where you know where your money is, you take it out, there's no fees attached to it, there's no control, somebody holding your money, and it's instant and quick, fast. It's a blink of eye. Only thing you doing is click, 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 and it's gone. Or you swipe, 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 and it's gone. Think about it. Cryptocurrency is the future. So, well, I'm not going to leave you hanging, so I'm going to go in and talk a little bit about cryptocurrency to ease your mind for your business. There's so many opportunities for cryptocurrency for your business. It's just, you have to make that decision if it's for you or not. But I will say, this is where society is going. Cryptocurrency is a form of payment that can be exchanged online for goods and services. Many companies have issued their own currencies, often called tokens, and these can be traded specifically for the good or service that the company provides. Think of them as you would arcade tokens or casino chips. So a lot of people want to know, well, how do I start a crypto exchange? Well, I'm just going to cover 10 topics to get you started. How to start a Bitcoin exchange in 10 simple steps. Obtain proper legal counsel to ensure licensing requirements are met. Attain funding for venture. Find cryptocurrency exchange software solution provider. Connect your exchange with others for adding liquidity. Partner with a payment processor. Implement best security practices. Go live via beta testing. Start marketing and PR campaign. Offer customer support. And number 10, maintain a legal team for ongoing compliances. So you have to remember, there's people that mine. You have to understand this. As the famed investor Peter Lynch said during the gold rush, most would-be miners lost money, but people who sold them picks, shovels, tents, and blue jeans made a nice profit. In the gold rush, that is cryptocurrency boom, one might compare the manufacturer of picks and shovels to the owners and operators of crypto exchange. If you too see the potential reward and you're looking to start up your Bitcoin exchange business, basically, I've already shared you the tips. So even though I've already discussed about cryptocurrency and a little small meaning of it, but I'm going to just go a little bit more in depth. What is cryptocurrency? It relies on peer-to-peer technology, such as decentralized in nature. In other words, no central bank or government regulates or backs it. Buys transfer directly to sellers without a third party to process payments. Cryptocurrency pretty much cut out the middleman in a transactions. Basically, that's what happens. You're less likely to have data breaches and hackers. Small business might choose to accept cryptocurrencies for many reasons, such as being at the forefront of technology, attracting customers who use crypto, or eliminating certain kinds of fraud. But it's right for your business. Benefits of accepting cryptocurrency offer several primary benefits that small business may want to consider. Lower transaction fees. It would intermittently dramatically reduce transaction fees. Small business accepting credit card payments often face fees of around 25 cents for each card swipe plus 2 to 4 cents % of the transaction total. These costs add up, which is why smaller stores often have credit card purchase minimums. So if you ever been into a little small brew and wine store or a little small grocery store or corner store, and they say, in order to use your card, you're going to have to spend $5. You have to spend a certain dollar amount, $5 or $6, or they won't allow you to use their credit card. That is the reason why, because the benefit of you using that credit card for $1, their fees already ate up the profit of what they sold. They would be at a loss if they didn't do it. And then you have to look at accepting cryptocurrency, the merchant protection. Cryptocurrency decentralized setup also protects merchants from fraudulent chargebacks. The transactions like cash are final because no third party can reverse charges. Learn and you don't have to worry about a signature to protect yourself against fraudulent chargebacks. How many times that you've been in business and you'll look up, you thought a payment came through, and then all of a sudden the person's payment is no good, or it'll appear on your system that it's cleared, and the customer will go back and turn back around and say that they didn't receive services. This prevents fraud. And another thing, cryptocurrency, if you choose to do this in business, increase your sales. Crypto's decentralized nature enables small business to expand and open their doors to international buyers for whom their products and services were once inaccessible. For example, a small electronic retailer reported selling $300,000 worth of merchandise to nearly 40 countries by accepting cryptocurrency. And final reason, catering to consumer preferences. Accepting cryptocurrency offers another advantage by giving customers an additional way to pay while providing an extra layer of protection for their information. Now, I'm not going to say that it's not no risk of accepting cryptocurrencies, because it does require you to set up a digital wallet on a digital currency exchange, which could be technically prohibited for small business owners unfamiliar with technology. Cryptocurrency is an information dense field with a relatively high learning curve, which can present a significant obstacle when you're also trying to run a business. So, this is just a few things. And I know I mentioned about volatile. Cryptocurrency volatility. The highest risk of digital currency is price volatility, which makes value extremely unpredictable. To illustrate, Bitcoin was first valued in pennies when introduced in 2009. Both rose to $19,172 per coin in December 2017. Now, you will need to use some form of arrangements for translating your cryptocurrency back into your currency of record. And you want to do it quickly and regularly. This is something, if you're accepting it, meaning that a coin can be valued at a certain dollar in the next few seconds, it can be, or next 5 minutes, or next day, it can go down or it can go up. So when you're accepting it, you need to take it in as soon as possible and choose the type of coin that you choose in your business. Now, you can use a merchant service company such as BitPay or Coinbase. Helps insulate small business against that volatile by immediately exchanging digital currency for its cash value. Through these services, cryptocurrency payments are made in real time for the currency current value. Meaning, when you're making that transaction, whatever the value is, that is the value. So even though your service may be $5.41, but if that person paid cryptocurrency $5.41, as soon as they walked out that door, it may skyrocket to 10, or it may drop down to 3. So Coinbase and BitPay makes it easy and user-friendly for you to go on and convert it to prevent that type of things from happening. The only reason a business should hold on to cryptocurrency would be if they're an investment in their business. And so it's like gambling with a revenue stream. Now, you want to know about the security, cryptocurrency security. Transactions eliminate cyber threats like stolen credit card numbers. The currency still isn't 100% safe. But there's nothing that's 100% safe. No way to completely prevent cyber criminals from getting their hands on users' wallets. This is dangerous because unlike currency like the US dollar or euro, cryptocurrency are not backed and assured. However, cryptocurrency companies are working to change that. Coinbase, for example, holds less than 2% of customers' digital currency online. In the event of a breach, the company fully insures losses. All the fiat currencies maintained on Coinbase is subject to FDIC insurance of up to $250,000, just like conventional banks. However, these protections don't apply. If your personal wallet is hacked, it is still your responsibility to secure your personal account. But you can rest easy knowing that the company suffers an attack, your funds are safe. To better protect your account, you can enable multi-factor authentication on your account. Secure and maintain your private keys and regularly back up your data. Companies are also working on solutions to address wallet security as well. See, the wallet is where the money is held and protected. Customers have their own personal keys that they keep to themselves, and the secret is they're not to give it to the business owner. This is something private. This is something where they have access to their money, and those are their personal codes. Now, Ethereum employs a biometric verification method that identifies a user based on their facial structure to grant wallet access, greatly reducing a theft ability to successfully steal someone's access. This method also helps users reconstitute their wallet when access is lost. So meaning that this wallet, which is a digital wallet, when they're setting up, they have facial recognition, and they have the keys, private keys, which is anywhere from 12 to 24 words that is only assigned to that particular person when they're using cryptocurrency. No matter what name, whether it's Bitcoin, whether it's Dogecoin, they all have their own keys when you're setting it up. No matter if you set up an account, a wallet, you have your own keys for the wallet to hold all your coins in. These are just some ideas that you may want to think about in accepting cryptocurrency in your business.